If you've never been audited before, or if you're just a normal person, that sounds really scary. What is an audit? The IRS has come knocking, and should you be scared? Should you not be scared? How can you help yourself? How can a CPA help you? That's all coming up next. Welcome to Office Hours, a tax podcast by Fujikawa Associates, and we are your hosts. I'm Josh Baldovino, one of Derek's clients, and this is Derek Fujikawa, who is the managing partner of Fujikawa Associates. Derek, how are you doing today?
Good, thank you. How are you doing?
Good. Today's a little doom and gloom episode. We're talking about audits.
Sure.
And I have to be honest, if you've never been audited before, or if you're just a normal person, that sounds really scary. What is an audit?
So actually, more people have been audited than you actually realize. If you've ever gotten a letter in the mail from the IRS, say you forgot to report a W-2 or a small piece of income and they sent you a letter, technically that's an audit. And usually that's relatively easy to fix. Either you forgot to put something on there and you just pay them, or you send in the proof that you did actually report this. Maybe they missed it somehow and it gets resolved. So that's a simple one. So there's that type of audit. And then there's what most people think of as what they call an office audit, where they come out to either you go into the IRS office or they come out to you and they go through your document. Either you bring in your documents to them or they come to you and go through all of your documents. And those are the ones that people get all scared about. As long as you keep good records and not doing anything shady, then I would say you don't have a lot to worry about. There's always the rogue IRS agent or one that's maybe not very reasonable, but in general, most IRS agents, as long as you have your good documentation and can show everything, then there's really not a lot to worry about with an audit. Again, if everything that you have is clean.
So there's the non-office one. That seems to be a little bit more common. They're just checking up on things. You might have to supply something else.
Yeah, that's pretty much automated. They just go through all the 1099s that they receive, match it up with what's on your return. If something's missing or they can't match everything up, then they send you a letter.
Gotcha. How often does the office audit happen?
Really, in my experience, not a lot. And actually, overall, it's not a huge number of the audits. And in general, just audits don't occur that much at all. The incidence of audit or the rate that people get audited is actually relatively low. If you make under $500,000, your chance of getting audited is less, around 0.5% of all returns.
Yeah.
If you think about the millions of returns out there, it's a relatively big number, but yeah, I mean, you've got a relatively minor chance of getting audited. And even then, those aren't really random audits. They're going to look for certain things. So it's not like your returns is going to be randomly picked for audit 0.5% of the time.
So what I'm hearing then is if I'm getting audited more often, that maybe because I'm earning more income, and essentially that almost could be a good thing then?
I guess you could put it that way. But yes, once you get over $500,000, then the incident, at least historically, the incidence of audit goes up and can go up significantly once you start making over $1 million, $5 million, those really big numbers.
Okay, fair enough. There's a new weird goal that I just put up for myself.
Get audited, right?
Okay, but what red flags would increase someone's likelihood for an audit?
Yeah, there's a number of different things. So one being like, say, claiming like large or unusual deductions. If you're only making, say, $100,000, but you got $50,000 of advertising or some large number that doesn't correspond with your income or what you're doing, then that's going to trigger the IRS to take a look closely. It doesn't guarantee you're going to get audited, but probably guarantees they're going to look at your return a little more closely. And if they feel like that it warrants further investigation, then they'll audit you.
Okay, so don't spend all of my money on a billboard. Got it.
Yeah. There could be a reason for spending that much on advertising or something. And if you can show that, then that's not a problem. But maybe you did do something that warranted that. But just be aware that if you do have something unusually large on your return, that it's going to get looked at more closely by the IRS.
Okay, fair enough.
So,
what are the factors may impact my audit?
Like I mentioned with the paper audits, if you don't report all your income, say you miss a brokerage statement or something, or don't put everything on your return that you get through your 1099s and your W-2s, that most definitely will trigger an audit because, like I said, they have a system, an automated system that just goes through all those documents and will match everything up. And it's not a perfect system. You could get audited even though you do report everything. I've had plenty of those where I've had to deal with the IRS and the state explaining that it's on the return and pretty obviously on the return, but they send a letter stating that you're missing it. So when you get those letters, don't be too scared. A lot of times it could just be that the IRS or the state made a mistake and you just have to point that out and show them that it is on the return.
Okay. Fair enough. So whether there's a mismatch somewhere, are verifying and finding proof.
Yes.
Any other factors?
Oh, yeah, a number of them. So another thing, too, is when your expenses or income, there's a large fluctuation or inconsistency. So say for the last 10 years, your, let's use supplies expense was $500. And then all of a sudden this year it's $10,000. And then say the next year goes back to 500. So that 1 year, that big jump in that one particular area, and it doesn't have to be that supplies, any category, is going to trigger a closer look into that. And depending on the degree of variance, it could or probably would trigger an audit.
Gotcha. We mentioned high income earlier. What about self-employed?
Yes. So that is something that does get looked at more closely, just because there's more room for someone to play with the numbers when you're self-employed. So with a W-2 employee, you get a W-2, you put that on your return. It's easily verifiable with the W-2 and the employer, right? So there's not much that you can play with on your return. But with a small business, say you're a self-employed individual and you have a Schedule C. So those are all numbers that are going to be coming from your independent information, right? You're going to be keeping your books, and you're the one keeping those books, right? So IRS is relying on you to maintain clean books and put them on the return. If you don't keep clean books, or say you're hiding income or inflating expenses, the IRS doesn't know that just by looking at your return. And so there's more scrutiny into small business returns or self-employed returns just because of that. Not necessarily because you yourself are doing anything wrong, but just because that option is available to anyone to do something that may or may not be within the rules of the IRS tax code. And so they do look at small businesses much closer, and there's a higher incidence of audit if you have a small business.
Gotcha. So they're basically saying that we don't know how to keep books as well as saying big corporations who are then giving out reports over to their employees.
Yeah, and not necessarily that you don't know how to. There's just more option to play with the numbers. So that's why they're going to look at it a little more closely. There's more availability to be dishonest there versus, say, a W-2 employee. You can't play with the numbers on a W-2.
Yeah. What about for cash incentive businesses? Say, for example, I don't know, some restaurants, or you go to a foreign market. How about things like that?
Yeah, those definitely get looked at closer too, because it's much easier to hide your income if you get paid with cash and there's no paper trail. So those do get looked at. So usually they have, say, liquor store would be one that is used as a cash basis business. They'll have kind of national average of what the income should be and what the expenses should be relative to the income. And if things don't quite look right, then they will audit you, or they'll start asking questions to see if, say, your expenses are in line with another store that makes $500,000, but you're only reporting $300,000, but your expenses are in line with someone that makes 500, then they're gonna start looking at that and wonder why your expenses are so high relative to your income, and then maybe send you an audit letter. So just things to think about. And there are IRS guidelines for specific businesses that you can actually look up through the IRS. And so you can see if you fall within those kind of industry standards.
And then what are on those guidelines? That's interesting.
They're called audit technique guides, and I don't know how often they are updated. They're like not industry standards, but industry averages for different income and expense items.
Oh, so it's like a benchmark that you can use for how much you should be making, maybe how much you should be expending.
Yeah. And that doesn't tell you what you to report, but at least gives you an idea. If something's off somewhere, to know that maybe you're miscategorizing things, or maybe you're deducting things you shouldn't be, or things like that. So at least it gives you an idea of where you are and what your likelihood of getting audited is based on the averages.
Interesting. Okay, the last one. How does claiming a home office, then, does that increase my audit risk too?
It has been a red flag in the past. I don't know if it is as much anymore, but as with the small business, it gives you a little more room to play with the numbers. So it can be a red flag. Knock on wood, I haven't had anyone get audited on that recently, but it is something you do want to keep very good records on, because if you do get audited, they will actually come out to your house. They'll look at the room. The ones that have been audited in the past, they'll go out to your house, they'll look at your room, make sure that it is truly an office, that it's not a guest room with a bed and a desk in the corner that you're deducting. It has to actually be a place of business. It has to look like an office.
Okay. So shoot more YouTube videos here, basically.
Yeah.
Fair. And I guess audit sounds scary, and there are all these different red flags. And as a CPA, how do you help your clients through an audit? What kind of support can we expect?
So as a CPA, we can represent you in front of the IRS. So really, we could go as far as you could have no contact with the IRS at all. Almost. They may have some questions to your business that we can't answer and things like that. But we can be kind of your first line of defense. We can deal with the auditors. And if it's a paper audit, we can do the whole thing. We just either call the IRS or submit a letter with all the documentation and explanation. But even with an office audit, we'll be the primary point of contact with the auditor, provide all the information, and answer a majority, if not all, of their questions.
As scary as audit sounds, it It actually sounds really nice to have a nice shield in front,
Sure.
just because I'm sure they also speak different lingo too.
Sure. Yes.
Is there any other things that we should think about in terms of red flags for an audit or even protecting ourselves?
And not so much red flags, but really it's just like we just mentioned before. I tell a lot of my clients, don't be worried about an audit. If you're keeping good records, doing everything, by the tax code, obviously there's going to be some gray areas with things, and those you can argue with the IRS. But if you're keeping good records and doing everything within the tax code, then I would not be worried about an audit, because as long as everything can be explained, then an audit shouldn't be painful. It's when you're playing with the rules and pushing boundaries and going beyond the gray areas and things like that is when you need to be worried about an audit, because then you're going to have some issues with the IRS.
Okay, fair enough. Knock on wood that doesn't happen. But if it does, I'm glad to have you in the corner. If you do not have a CPA in your corner and you are at all thinking about it, then that's obviously time to maybe consider getting a CPA. And if you like Derek or would like to book a discovery call with him, you can click the link down below. Derek, thanks so much for kind of demystifying audits for everybody. That was really helpful.
Sure. Thank you.
And if anyone has any questions, let us know in the comments. Otherwise, we will see you all in the next episode. Bye, everyone.